So hello and good afternoon. In my case, it's Berlin, Germany, from where you can listen to me and my weekly market outlook here for Admiral Markets. But probably you're listening from, I don't know, let's say Tahiti, then it's somewhere around midnight right now, or you're listening to this webinar here somewhere in the region around London, and then it's around noon or somewhere in the morning in the US. It's a global webinar, so wherever you listen to this, I just hope that I can deliver some input, some good ideas, some solid ideas which you will bring you to and your trading to a level that you feel confident in trading the markets then, especially next week. So we want to give an outlook here on what will move the markets next week. And before we start, as usual, we'll have to have a look here at the risk disclaimer, and that's trading with financial instruments offered by Admiral Markets. In this case, CFDs, ETFs, stocks that they carry a high level of risk, which is not suitable for all investors due to their complex nature. And before entering into any agreement or transaction, that you please make sure that you read the terms and conditions of the service provided by Admiral Markets, that you please consult a specialist if necessary to ensure that you understand the risks involved in trading, and also that you should study carefully the so-called KID, which is short for Key Information Documents, in order to understand the nature, risks, costs, potential gains and losses of margined products offered by Admiral Markets. And so then the next slide shows, one question, that was slightly too fast, why Admiral Markets. Especially, and this is the first bullet point you can read here, especially interesting to have a deeper look at Admiral Markets is because of the very, very, very competitive DAX offering with a typical spread of 0.8 points during the main trading hours. Currently, there is, thanks to the birthday of the DAX, the 30th birthday, at the beginning of this month, there's a special offering from Admiral where you can trade with a typical spread of 0.5 points during the main trading hours. We had already in the webinars over the last days, we had an introduction here on why the spread matters, especially in terms of commissions and how this interacts then with your overall, hopefully overall profitability in trading, and how lower commissions will affect your profitability. And this is especially true, sure, for trading approaches which are looking at a very, very low time frame in this case. Once again, too fast. There will be important changes for Forex and CFD trading. So I just received an email here from Admiral Markets. Again, effective at Admiral Markets from Monday, the 30th of July 2018 onwards. So usually it's the 1st of August, but Admiral already implements those changes 2 days before. And not only that, but is delivering high input here and lots of input to make sure that you have enough time to make adaptations at your end if necessary in terms of positions you may hold currently, and then be aware that there will be higher margin requirements for CFDs, for FX, Forex majors here. In this case, a maximum leverage of 30-1 is offered in terms of Forex majors, in this case EURUSD, or 120 for the DAX, for example. And then you please make sure that you're adequately positioned, respectively, that your account shows the respective margin, respectively the account standing in this case, so that you have enough money in your account to trade then, and not to be affected in a negative way, that there will be margin calls or something like that. So just that you make sure that you will be positioned accordingly. And there's also something really interesting Admiral is offering, something you should be aware of. There is a chance to professionalize yourself if you meet certain criteria. Therefore, contact Admiral Markets, please. But the interesting thing is that here Admiral offers a negative balance protection, similar to what you have in terms of a retail client status. But here, if you're professionalized, you're also protected up to 50,000 British pound, according to the policy from Admiral Markets. Again, for further information, just contact the support from Admiral Markets. There are the contact details. And now that's me, and here's our agenda for today. And let's have a look at what we want to look at. We are looking at what are the key economic events in the upcoming trading week. So having a look at the news calendar in this case, you will find it on the website from Admiral. There's also the question, what's the current bias in the FX, equity, and commodity markets? Something really interesting right now happening in pound sterling based on the NATO summit over the last days, and also thanks to an interview which Donald Trump gave before the NATO summit, and an interview he gave the newspaper The Sun. Which is known to be, it's a newspaper which is owned by Rupert Murdoch. Rupert Murdoch is also the owner of Fox News, and we know that Fox News then is very pro Donald Trump in the US. It's very interesting to see now that after this interview, we want to have a deeper look in. Pound sterling currently sells off on a broad scale, especially against the US dollar. But also, it's probably interesting to watch a pound against the Japanese yen if now risk aversion spreads over and is then potentially having a negative impact on the equity markets here. In this case, so pound sterling is definitely worth watching. Same is true for all dollar crosses, USD crosses, and also Japanese yen crosses. But we want to have a look at this step by step in the upcoming minutes. And then also the question, which trading opportunities may arise? Therefore, for example, also currency pair, which is currently something which is really interesting for me, even though to some of you probably it's a more, let's call it exotic currency pair, since I know that Euro USD is one of the main traded assets, and then main traded FX pairs. And then there's also the DAX. Dollar CAD is usually, not that actively traded, but there's a very, very interesting development, especially after the BOC decision this week. Which is in fact surprising and probably underlining that there is some CAD weakness to be expected. On the other hand, dollar strength to be expected, and that dollar CAD, in this case USD CAD, is about to rise higher. But again, step by step, this is our agenda. And from here, thank you for your attention, probably a little too early. Now let's have a look here, first of all, at, in this case, the pound sterling against the US dollar, known as cable. And you can see, this is a daily chart. You can see that we are currently under serious pressure here, and that pound sterling is about to go for 131 and potentially closing the week at a very low level, probably in the region around the yearly lows, and is about, and you can clearly see that here. You can spot it there. There's the low from May, the last week of May. And then there's also the low here from November and the low from October. So we can definitely call this a very significant region for support here. If we go below that level, I think that there's no further support to be found until 127.80 to 128, in fact. And there's a good chance that we will significantly break below 130. This is especially true if the US dollar index future will rise above 95. And this is also something which is then interesting for Euro USD. But again, step by step. First of all, have a look here at pound sterling and what just happened. So where is this pressure coming from? I've prepared already something. So let me just show you, first of all, the economic calendar. And in this context, while talking about pound sterling, what you can see is that obviously next week it's not only the current interview from Trump which is causing pound sterling to suffer here, especially against the US dollar, but there's also some economic data which comes out and which could probably trigger some further weakness in pound sterling. Then there's the unemployment rate, respectively employment situation covering around here on Tuesday. That is something which will be published here on Tuesday, on July 17th, and then there's also the inflation rate Wednesday in this context. Nothing more after that. So from a high impact here status, this is something you can filter, by the way, here on the website. By the way, it's at admiralmarkets.com, and then if you click on analytics, you click on Forex calendar, and then you can say which time span do you want to cover here. You can here also give in the time when the number is published. In my case, it would be Europe, and in this case then here Berlin, and then the time would slightly change. So we would go to, in this case, 1 in this case, yeah, currently 1 p.m. European Central European time. In this case, the time here, the current time is you have to, by the way, update it. Probably it makes more sense that it perfectly shows when I prepared this. That was around 1 hour ago. So I just clicked F5 to update the page. And so usually we have to upload the site, but let's just give it some time here. Yeah, perfect. Now it's 12. You can see it. This is London time then. So 1 hour before the time I have right now here on my clock. But the thing is, and this is why I mentioned this, it's very interesting to look at these numbers, because if they now come in below expectation, meaning, for example, the unemployment rate, for example, ticking up to 4.3, let's say, or also the inflation rate coming up below expectation as previous stated here at 2.4, there's a good reason to expect the Bank of England then not to hike rates too soon. So the main reason for the current bearish price action starting here from mid of April now, and where we traded, by the way, at 143 and higher than that, 144 nearly. It made slightly new highs and then sold off, was that it's completely priced out here. The speculation around the potential rate hike of the Bank of England in 2018, and if the numbers now disappoint, it could mean a further push on the downside. Then also mainly triggered by the comments from Donald Trump, which is causing right now pound sterling to lose some ground. And therefore, I've prepared an article here from Zero Hedge, already published in the morning, by the way. The irony behind this is, by the way, that this picture was taken yesterday in the evening when Trump was with his wife Melania, invited by Theresa May for dinner. And it was when they finished dinner, the article was published by The Sun here, by the way, and you can read already in the headline. In bombshell interview, Trump slams Theresa May hours ahead of meeting in this case. So they first had the dinner and then they had their meeting, and that was that Trump criticized her for handling how she handled the Brexit, and saying that her plans for a soft Brexit would kill any hopes of a trade deal with the US. And you probably remember there was a reason to believe that if there's a hard Brexit, there will be a stronger connection between Great Britain and the US. And we discussed it at the beginning of this year. And now with those, with the decision made at the last weekend here, and now soft Brexit speculation coming up again with the Brexit Minister Davis, and also the Foreign Minister Boris Johnson, who was also mentioned as a great prime minister from Donald Trump. So obviously Donald Trump likes Boris Johnson. The thing is that now the pressure on May is building, and initially pounds sold off, and at the beginning of the week I said, well, the thing is that I don't think that this weakness will continue, but I more think that if there is some kind of soft Brexit forming at the horizon, or there is any kind of speculations now coming up and taking up the ball from Donald Tusk here, for example, who said that probably they will step back from Brexit. You know that Donald Tusk, I don't know which position he holds in the European Union, but he's definitely someone you should listen to if he says something. And Donald Tusk here in this context then mentioned that there's probably a slight chance that there will be a second Brexit referendum, and people can then decide whether they really want to have the Brexit or not. So the interesting thing about this is that I said, well, even if we now selling off because of potential vacuum here, which could occur in the UK politics, then if Theresa May steps back as a prime minister, then the thing, well, resigns as prime minister, then we could probably expect in this case short-term pound sterling weakness. But if the Brexit does not happen as it was supposed to happen, hard Brexit and the clear cut between UK and the EU in this case, well, there's a good chance that pound sterling could start to rally from here. Also mainly due to the fact that there will be some kind of other deals in terms of trade then made between the UK and the US, for example. So now Theresa May sees some serious pressure forming, because now the deal with the EU has to go through, since Trump already said, well, if you decide to go with this soft Brexit decision, well, fine, do it. But then our deal, they probably already negotiated about several months ago, is dead. So don't expect us to step up then and give you a fair and the nice deal here in this context. So this is something which is currently driving pound sterling lower, and again, which has some further potential on the downside if the US dollar continues to rise, and on top of that, pound sterling numbers, UK numbers next week coming out weaker than expected. Therefore, I've prepared another chart, and I'm sorry, that one here. So this is the US dollar index I will present to you here. And what you can see is very interesting. It consists of, in this case, 6 other currencies, a basket of 6 currencies against which the US dollar is calculated. And so there's a future. You have probably heard about the Commitment of Traders report before. I'll introduce this concept, if you haven't heard about this before, on Monday, when I'll take over a webinar here. By the way, let me just open this here, Forex webinars, and I'll open a new tab therefore. So usually you listen to Jay Medro here on Monday then at 11 German time in this case, so on the real-time daily trading ideas, but I take it over since he's on vacation, and so I'll introduce this then to you, and we'll have a deeper look also at the Commitment of Traders report here from the US dollar. But the thing is, this is currently more interesting. The 3 main currencies, especially true, by the way, is the euro here, is the euro, Japanese yen, and the pound sterling. And as you can see, euro nearly has 60% in this basket. And the interesting thing now about this is that if the euro, if US dollar really makes it above 95, then the euro should be expected to go down. And by the way, oh no, I haven't opened it yet, but let's use this Supreme add-on here. Which we know under the so-called the correlation matrix, and I'll just want to open it here. So let's click OK. And you've seen this already before, by the way. Does it work? No. 1 second. It takes a little. So I have to do it that way. So the interesting thing is that currently you can see EURUSD, it's daily chart. And I've already reduced it, let's say. So EURUSD and pound sterling both have a high positive correlation, meaning if one goes down, you should expect the same for the other currency. So meaning nothing more than if pound sterling there goes down, this is also potentially a driver lower for the euro. I'll present to you some other thoughts, by the way, on this. I think that euro going lower and also pound sterling going lower, especially euro going lower, with the outlook here and what's happening currently between the US and China in terms of those tariffs, also imposed by the White House / Donald Trump. It's something how they try to counter these tariffs here, in fact. But the thing is that euro and also pound sterling both have a high positive correlation, meaning if euro USD is expected to go lower, you should expect pound sterling to go lower, and the other way around. And especially, this is especially true when looking here at the US dollar index future, which I've prepared already here. So what you can see here, this is a neutral website where I just opened the US dollar index, in this case the cash, but you can trade it with the future here. And there you can see this thin red line in this case. So it's not the most beautiful chart in the world, but it gets the job done, let's say. And it shows how important this region around 95 is. If you make it above that level, it's not only that it's a chart level, but it's currently acting as kind of support. It's a resistance zone, but it's kind of a support for the sequence of falling highs and falling lows, which formed from the beginning of 2017 onwards. So if we make it above that level, it could trigger some serious US dollar strength here. And again, if the US dollar makes it above that level, that triggers also, and based on this weight in the US dollar index future here, it potentially also triggers euro weakness against the US dollar. In this context, bringing the region around 115 in our main focus, which can be found here with this green line. So currently we're trading within a trading range between 115 on the downside and 118, 1830 on the upside. This is something like 300 pips, but it also is perfect to see how much potential on the downside should be expected if we really make it below that level around 115. I expect then Euro USD to have potential down towards 112 probably. So it could be a quite brutal move on the downside if there's further weakness to be expected. And again, from a current situation here, I think it's likely to really see Euro USD weakening in the near term. And that may surprise you, because I was quite positive last week. You remember probably, I said, well, if we make it above 117, 1730 here, thanks to weak NFPs, they weren't really weak because the employment situation itself was fine, was okay. Numbers came in above expectation, but average hourly earnings disappointed. And probably this is the more important number to look at here. And it really triggered some weakness. And Euro USD pushed above 117 and then made it at the beginning of this trading week up to 118. The interesting thing now is that we failed to break above that level, but in fact turned around from this region and are currently trading lower again. And this is a sign that this sequence of falling highs and falling lows, or respectively this down sequence here, which was brought underway from midst of April onwards, that this is likely to continue, that we are only seeing consolidation here, and that we are now seeing another push lower and probably a break of 115 here, and then going for 112 on the downside. And again, the interesting thing about this is it's not only that this is showing the potential Euro USD has on the downside based on the high weight the Euro has in this US dollar index future, but again, and this is another thing I'd like to mention here, remember the trade war between the US and China here is countered by the Chinese. And even though it's not mentioned in the media that strongly, but I have opened the US dollar against the Chinese renminbi here, offshore renminbi, by the way. Let me just add this probably in the chart. So this is the dollar against the Yuan renminbi, offshore renminbi. Onshore renminbi would be with a Y here. In this case, it's an H, but this doesn't really matter. What matters is look at what happened from the end of March onwards, and remember also what happened there. It was at the end of March that those tariffs first made it into the media, and that was the topic from there onwards. And from there onwards, it's not only that the Chinese equity markets sold off sharply, but also that the renminbi sold off sharply. So the Chinese countered those imposing tariffs here. They countered it with saying, okay, then we devalue our currency to stabilize our export sector. If they really, if they let's say, what's the word for this? If they succeed with it, this is something we'll have to wait for. Interesting enough, what we can already see is that, and this is something where the numbers in the morning come into play. Have a look here at the economic calendar again. The balance of trade, it rose to more than it was forecasted. You can see it here. It nearly doubled, by the way, by the previous number. The numbers for balance of trade here for month of June came in at 41.6 billion US dollar, which means nothing more than there was more exports than there were imports. Numbers obviously came in above expectation for the exports, and they came in below the numbers being imported here in this context. So you can already see these numbers are for June. You can already see that the devaluation of the June renminbi already has, or gets the job done to some extent. By the way, one second, please. I'll be back in a second. Okay, so so this obviously can be already explained here, these numbers, with those countermeasures brought up by the Chinese. And now the thing is, remember, it's a trade war which is building right now, and it's an escalation you can see between the US and China. But there has been several headlines when Trump attacked Germany. Germany is after the Chinese, and this is something I already brought up here, is after the Chinese the second target of such a potential trade war. See how Germany profited from the very expensive currency policy they brought up from 2014, 2015 onwards, aggressively devaluing the euro. See how Germany profits in terms of its automobile sector from this devaluation, especially. And this is no surprise that Trump is already bringing this up, attacking Germany, by the way, again in terms of the military expenses here, and attacking it as a deal maker with the Russians. But on the other hand, trying to profit from the US and their military expenses here. So it's a very interesting development. And now the thing is, and this is where the cycle closes. In fact, if you look at what's happening here with the Yuan renminbi, I'm not surprised if there is some willingness to do it, let's call it the Chinese way, in terms of the ECB in this case, but also European policy makers, especially Angela Merkel for Germany, to really go for a devaluation in the euro in this case. So I really believe that rather sooner than later, there will be a push towards 115. And I also see the euro going below this level here, and expect the euro to devalue after obviously failing to make it above 118, which would have brightened the technical picture for the euro bulls. But now, after we failed to make it to these levels, and these developments around this NATO summit and around China especially, I think chances are increasing that the euro will test the region 115 in the medium to minimum. Probably we are about to see it already next week, the test of this region, and not only that, but also breaking below that level. And again, therefore, we go with fresh data around the commitment of traders report, and we'll have a look. I wouldn't be surprised to see the big speculators here probably already position themselves, anticipating such a break below 115 here, and seeing the speculative interest here of going up already, meaning non-commercials position themselves aggressively for a further decline of the euro, so going short, so seeing an increase of net short positioning in the euro here. And in this context, so we have to say that euro is potentially about to go lower. And again, now here, look at this high positive correlation between pound sterling and euro USD. So I think both are likely to push lower, meaning in the euro, in the US dollar index future, then we are about to push above 195 and making it above that level. The interesting thing is, remember, therefore, there's also a third currency, by the way, here. There's a third currency, it's the Japanese yen with 13.6% weight. So what about what is to expect for the Japanese yen? And this is something interesting. I think the Japanese yen is currently, especially by the way, after this break above a quite significant trend line. There we go. Here it is. So where is this blue line coming from? Let's zoom out of the chart and you can clearly spot where it comes from. So usually I'm not a big friend of such trend lines. In my trading, usually I go for horizontal lines, not diagonal ones, but I really prefer those horizontal lines. But nevertheless, if they have such a significance and are obviously significant based on the fact that this trend line goes back into the year of 2015, I definitely look at it, and I'm not surprised to see this sharp rise in the Japan, or in this case, sharp decline in the Japanese yen, sharp rise in dollar Japanese yen here. I'm not surprised to see this after we broke above that level. And this line, by the way, around 111, 111.30, 111.50 here, now turned green from being red last week, if you remember. So the thing is that all in all, I think that dollar Japanese yen has some potential on the upside, which could probably push us as high as 113.50, 113.80, 114. So we are probably about to push higher here. Nevertheless, I think that compared to the euro and also compared to the pound sterling, Japanese yen is probably about to present itself a little more stable, because those developments now in Brussels at the NATO summit, the developments around the Brexit and the comments from Donald Trump, they show one thing quite surely, that there is more headwinds ahead, especially for equity markets, resulting out of the fears around an escalation of the trade war. Now, probably the situation around the US and China is mostly priced in. I'm not saying it will calm down, but I think it's mostly priced into the markets. But now, probably Trump is about to attack, especially Euro and here Germany again. And this said, I think chances are high that there's probably some risk aversion building, which could then push into the market. And what we know is that the Japanese yen usually performs quite well based on such a risk aversion building here, because usually you finance carry trades with cheap currencies. In this case, one of the cheapest is the Japanese yen, followed by, if not slightly overtaken by the Swiss franc. But we don't want to have a look at the Swiss franc right now, but focusing on Japanese yen here. So what I'm saying is that I could imagine, if such risk aversion is pushing into the market, that the Japanese yen could present itself stable against a very solid US dollar, probably also profiting from the from such a risk aversion here, and probably we get to see some kind of pushback. But based on the current strength in the US dollar, the Japanese yen and the US dollar probably present itself in a very, with a similar amount of strength currently. And this said, it means nothing more than, if I consider USD to be a short candidate here, or pound sterling against the US dollar a short candidate, that I also consider, based on my outlook for the Japanese yen, which is positive, I consider Euro Japanese yen to be a short candidate, but also pound against the Japanese yen, for example, to be a short candidate. So the thing is that I consider US dollar and also Japanese yen to have an advantage in the under current market conditions, while I consider euro but also pound sterling to be weaker, even though I think especially European politicians plus and this resulting in an all-in-all bearish outlook for Euro USD, but also for Euro Japanese yen, for example, while probably the rally in dollar Japanese yen will lose some of its momentum, even though I have to say I consider chances to be good, that there is some further potential for another 100 pips on the upside, and dollar Japanese yen probably moving up to 114 within the next weeks. Then if there is some kind of relief rally in equities or something. Now let's have a look at the equities and have a look here, especially in the DAX. So What I can say is that I consider this pullback here not coming with a big surprise to me. I think I made it clear already last week in our weekly forecast that I have a quite positive outlook for the DAX, at least for the last trading days. And I think chances are good that we are going back towards 12,600 points, even though I wasn't that sure if this is a sustainable move. And the thing is that, in fact, the first reaction came quickly after with this push lower. And now there was another attempt to make it back towards 12,600 points. Currently, the DAX can stabilize itself above 12,500, even though I think, and this is something we have to wait for now, US markets to open. Let's see how US markets will open, if there will be, if Wall Street will give back some of the gains of the last trading days. If this really happens, I think chances are good that the DAX can close the week below 12,500 points, which is, by the way, not such a big deal. I think it's where we have a good chance to see a crackdown, some really dynamic intraday moves on the downside if we go below 12,400 points. But the thing is that I consider chances to be higher that there will be some bearish momentum taken on within the next trading days, and then in the next trading weeks in the DAX, then we'll make it significantly back above 12,600 points and see a deeper regressive move, which will push us probably up to 12,900, probably 13,000 points. But I consider chances to be higher that there's a push lower. That's more likely, and especially we'll get to see an acceleration on the downside if we push below 12,400 points. Let's see what US equity markets deliver today. Probably we'll close the week this day. I'm sorry, we'll close the trading week here this way, below 12,400 points. I have to be honest, the thing is I have two positions going right now, and I wouldn't be unhappy to see such a move, because first of all, I'm currently short the DAX, and I'm also short Euro Japanese yen. So, but I present the same ideas to you if I was positioned long in the DAX, respectively long in Euro Japanese yen. Those are two systemic trades, so I have no real chance to intervene here, but only from a discretionary perspective if I see the mode to be extended in one or the other direction. Currently, I have to say I'd really love to see some kind of risk aversion into the weekly close. That would be quite nice. But again, I'd present the same ideas as I present to you right here if I was positioned the other way around, because I'm really skeptical about the current situation, especially after this interview here with Donald Trump and the Sun. Right before he was about to meet Theresa May, and this is really giving the whole interview, the whole meeting of those two, somehow quite clear tendency, which is showing that Donald Trump is here to make some business, let's say, and not to play around and meet and greet the people and say, hey, nice to meet you, but he's here to make clear that he still considers America to be first. And that's, I think this gives the whole situation some potential for further potential on the downside. And so that's it around the current situation. Again, I'm skeptical about the markets. I don't think that Dow Jones will make it above 25,000 again into the weekly close. I'd be more than surprised by it. I think chances are good that we're probably to see some losses. Sure, this is very difficult to tell right now. It's a 50-50. But with my position being short the DAX and being short Euro Japanese yen, I'd really prefer such a scenario here. And again, there's some skepticism. Not sure if we will make it in the Dow Jones in this case below 24,600 points. I think this is 300 points to go and more than 1% from the current readings. But if there's enough fear building, risk aversion forming, and enough momentum taken on the downside, chances are good that the Dow Jones will probably see some losses into the weekly close. And by the way, that's sad. Now let's have a look at the precious metal sector. Let's have a look here at gold. There's also some interesting developments, because we're now about to see another test of this region here, of this green line, which is presenting itself around 1,234 US dollar per ounce. So gold sees some weakness right now, mainly due to the fact that it has a negative correlation towards the US dollar. By the way, let me just see. Is it open here? No. But what we'll try is the following. We'll try to add XAU here. No. Is it gold? Yes. Oh, I'm sorry. Okay, it's gold then. Let's add it here and save it. And there you can see it. Euro USD, pound USD, both are also positively correlated to Euro USD, to gold. Both. The thing is that gold is negatively correlated to the US dollar. The interesting thing is, nevertheless, if there's really risk aversion coming into the market, there's a good chance that this correlation is then abandoned, at least short-term abandoned, meaning there's a good chance that the gold probably pushes higher from here. Now, sure, we have to wait for this move to happen, and I'd like to emphasize now I'm down at the 1 hour chart. We have to wait until we make it back above 1,247, 48 here USD per ounce. But if we make it back above that level, this is also a potential trigger here on the upside, and it's perfectly fitting my picture I've drawn for the dollar Japanese yen, because usually dollar, Japanese yen, and gold, in this case, these two currencies are also negatively correlated to each other, because usually what you see is if there's risk aversion coming into the market, the Japanese yen profits from this unwinding of carry trade here. And the interesting thing is that it also means that usually yields are pushed lower, because markets then are going for safe havens, which are also found in the most liquid bonds around the planet, and this is T-note futures, or in this case, it's US T-note futures. And meaning if there's a high demand for those futures, then usually yields are pushed lower, which is then also resulting in demand into the yield-less currency. Let's put this in quotation marks, but in fact, gold is a currency. You can see then demand in gold too. So if dollar yen pushes lower, this is pushing yields lower, where usually resulting, you can see parallel to this, yields pushing lower, and this is usually pushing gold higher. It's difficult to say if really there's enough risk aversion forming, which would then result in gold pushing higher, but I'm quite positive for gold myself. It's not only that I consider the Japanese yen to see some demand and stabilize against the US dollar, but the same is also true for gold. I could imagine gold to push higher from here, even though you'd be careful, or I'd be careful and wait for gold to push back above 1,247 to 248, because this would then negate the sequence of falling highs and falling lows on an hourly chart. I've also promised at the beginning of the webinar, we want to have a look at dollar Canadian dollar, and the interesting reaction here of this, even though it was a hawkish hike from Stephen Paulos. So let me just show this here, probably in my Twitter account. 1 second, please. So I've retweeted it. It was already on Wednesday, but let me just please show you what I retweeted. So there was there was 2 tweets, in fact. 1 second. I scroll down here to the 11th here, and it's Paulos, inflation on target, economy operating near capacity, and BOC believes higher rates will be needed. So this is in fact a hawkish stance and makes hiking rates more likely. Now the interesting thing is there was an initial bullish reaction, but then a dollar Canadian dollar took off, and so Canadian dollar sold off. There was someone or some people saying, hey, that had something to do with this sell-off in WTI prices. So WTI couldn't stabilize here, but topped out and now pushed lower. The thing is, however, or whatever you see here, I think it's a clear sign, which is showing that we definitely broke this region quite significantly here around 131 in this case, and that the retest now is a potential long trigger we found, and we have a good chance from here to at least see a test of 134 again, if not pushing higher and going then for 138, probably 140 in the next months here in dollar Canadian dollar, especially if WTI tops out. Probably this is another trigger. So dollar CAD here has shown that it has found support now around 31 and has some good potential to push at least towards 133.80 to 134. If we make it above that level, it's not only a forthrighting of this sequence of higher highs and higher lows, but it's also activating then in the next months the region around 38 to 140, and also meaning that WTI prices are probably going lower from here. Yes, and that's it for those two markets then, dollar Canadian dollar and WTI. And in fact, that's it from my end. I just hope that you enjoyed this webinar. I wish you all the best. Happy trading. Watch your stops. Have a nice weekend, first of all. Enjoy yourself. And on Monday, we'll have a look then at the Commitment of Traders report in the real-time. Let's go to the website here from Admiral Markets, the real-time daily trading ideas at 11 German time, which is then 11 German time. It's 10, yes, sure. It's 10 a.m. London. And at the end of the day here, same day on Monday, we'll look at the open range breakout again, a strategy which you can trade, hopefully trade the markets profitably with then, focusing on the S&P 500, US equity markets, but you can also duplicate it, probably even more interesting right now, thanks to the offering from Admiral here of the 0.5 spread during the main trading hours. We'll also focus here, or look at how to adopt this strategy then to the DAX. That's it from my end. So have a nice weekend. Enjoy yourself. Talk to you on Monday. I look forward to it. And all the best here from Berlin, Germany. See you. Talk to you soon. And bye-bye.